Access to venture capital opportunities has traditionally been limited to accredited investors and institutional investors due to the inherent risks and private nature of these investments. However, there are several ways that average investors can gain exposure to venture capital opportunities. 1. Invest in venture capital funds. One of the most common ways for individual investors to access venture capital opportunities is by investing in venture capital funds. These funds pool money from multiple investors to invest in a diversified portfolio of startups. Look for funds that are accessible to non-accredited investors or consider joining an investment platform that offers access to such funds. 2. Crowdfunding platforms. Some crowdfunding platforms specialize in providing access to early-stage startups. Equity crowdfunding allows investors to buy shares in private companies, providing a way for average investors to participate in the venture capital space. Be aware that equity crowdfunding investments come with risks, and due diligence is crucial. 3. Angel investing platforms. There are online platforms that connect individual investors with startup companies seeking funding. These platforms allow investors to participate in angel investing with relatively small amounts of capital. Examples include Seed Invest, Crowdcube, and AngelList. 4. Secondary market platforms. Some secondary market platforms enable investors to buy shares in privately held companies from existing shareholders. This allows investors to gain exposure to companies that have already raised venture capital but have not yet gone public. 5. Investment syndicates. Joining an investment syndicate led by an experienced angel investor or venture capitalist is another way to gain access to venture capital opportunities. Syndicates pool capital from multiple investors to invest in startups. 6. Venture capital ETFs. Exchange-traded funds focused on venture capital or private equity can provide investors with exposure to a diversified portfolio of private companies. These funds are traded on public exchanges, making them more accessible than direct investments in private startups. 7. Direct investment platforms. Some platforms allow investors to directly invest in specific startups. This approach requires careful consideration of individual companies, and investors should conduct thorough due diligence before making direct investments. 8. Networking and angel groups. Networking within the startup community and participating in angel investor groups can provide opportunities to learn about and invest in early-stage companies. Joining local or online angel groups allows individuals to collaborate with experienced investors. It's important to note that investing in venture capital involves high risk, and not all startups succeed. Due diligence, a diversified approach, and understanding the risks associated with early-stage investments are crucial. Additionally, regulations around investing in private companies vary by country, and investors should be aware of and comply with applicable securities laws. Consulting with financial advisors and conducting thorough research before making any investment decisions is highly recommended.